get too risky to get involved because of the volatility or the extent of the price swings. And if you were looking at the markets recently, you might put in that category such things as a full-size silver futures contract or cotton futures. Recent months have made some very abrupt type of moves, big move days, and it's great if you're on the right side, but there's a lot of risk. You also may want to be a little careful about some key report areas like we've had with in the grains, the potential, as I said, with the crop or with the employment report. A lot of types of things you need to be a little more cautious, play a little bit more conservatively. You need to find what's comfortable, what works for you, in terms of the type of instrument you're going to trade, the fundamentals that you can understand, the amount of money you have that's involved, the extent of potential price moves, kind of what's normal in those markets. If you're doing that, it's like traveling. You just have to pick a train that meets your schedule and your price, and you want to get on the track to where you want to go. And you want to be on board that train when it does take off. Once you have that market and get on the right track, you have to have some kind of tactics or techniques. You need to look what's happening, in the tide type thing where the market is maybe the big picture situation is, as it is today, rather bearish. So can you find a stock within there to buy? It's much more difficult. So you need to know what that big picture story is and what it is influencing the market that you might want to trade. And of course, your trading style is very important, and your personality will determine that. You may want to be a long-term position trader, maybe a day trader, a short-term swing trader, all different types, and there are going to be some markets that are going to fit different traders in different ways at different times. So you always have to assess all those kinds of things before you pick on a market. And then when you do have a kind of a market that's picked out, you need to have to pick out the criteria that you will use to determine when and where you're going to trade, when you're going to enter. And that means you have to have tools and the time to detect the trades where the probabilities are more on your side. So what do you need to help you trade? Kind of that's the situation that you face. The software that I'm using today is Vantage Point Intermarket Analysis software. It is based upon, as its name implies, intermarket analysis, provides short-term market forecast, does not attempt to predict the future, does not tell you what the Dow will do in a week, but it will help you with short-term forecasts for the next day, 2 days, 3 days, something like that. Very difficult to get your handles on any kind of fundamentals because most often you might be way down the line among those who will hear the news, and then after you do hear the news, and you get a lot of smart people out there figuring the interpretation of that news, and then there's you. So you are not in a good position to really trade on the basis of the fundamentals solely, and unless you have some special insight into the market and have your own maybe fortune-telling ball there that you can then look at the markets and what's happening. That's pretty much a guess. And I'm going to tell you, somebody's going to say, well, what's the Dow going to do tomorrow? And I'm going to tell you that I don't know. So don't expect a webinar that is going to be able to tell you, my webinar is going to be able to tell you that we are going to have a, kind of a bounce back. You might expect that. We've had a very sharp setback today, August the 4th, big drop. But can I tell you that we're going to have a little bounce back tomorrow to recover? I don't know, and I don't know that anybody knows. Logic says yes, but, is that the case? We're going to look at some charts, going to run through some. First of all, the long-term charts. This is a one-year look at the various charts that we're going to be talking about because we need to always get perspective. Where are we? What kind of markets are we dealing with? This happens to be the E-mini S&P 500, one of the most popular contracts. You can see that during the period from September 1 until about the 1st of March, somewhere in there, we had a nice trending market. So if you were in a trend trading mode, you were in pretty good shape. I mean, obviously a few setbacks, which you always get in the market, but that's kind of was a trending type of thing. And know that what we're doing today, with the markets having been what they're doing today, we can perhaps expect a change in that. Again, is that going to happen? I don't know. It's kind of hard to say because I'm not a forecaster and it's not the way I look at it. But in the way we were setting up here with the range that we had in the markets, we had a situation where we kind of got up to a high and put a top into that around 1360, put a bottom into that around 1260, and it traded within a range. And so at that point, you needed to have more of a swing trading type style, maybe even if you were interested in kind of reducing the possibility of risk exposure overnight, you might want to go to a day trading, intraday trading. So we've talked about those in other webinars. Won't get into all the details, but just to say that there are different situations, different times that we have. Obviously, again, depends upon the size of your account and so forth. When we look at it, what we know today, and we're going to look at this in more detail, is that we know today that we have broken down through the downside edge of this was around 1250, give or take a few points, 1250, somewhere in there, dropped sharply lower. So I will predict that the margin in a downtrend is going down. Now, my prediction is worth no more than anyone else's, and so I don't expect that to be, the gospel. It's not going to necessarily be true, but that's, an opinion that we can't trade. We're going to just keep an eye on indicators, and we're going to look at those in a minute to see kind of what makes sense for where we're going to trade. Just to run through a couple of other longer-term ones, we have the euro, very popular. As you can see, it also had its trending moments. Currencies have a reputation for trending, but you can also see in recent days the euro has bounced back and forth, kind of keep working towards the kind of the apex of a descending triangle. Again, is it going to break out above, below? Logic says they have many troubles yet in Europe, not resolved. They've got Italy to deal with. They've got other things. And so logic says the euro is going to break, but we also have a situation where what's going to replace it. So if you do want to market, and if you're a trending type trader, and you do want something that's a little more friendly